Hey everybody, welcome. My name is Pete. Welcome to today's best stock picks. It's Tuesday, June 23rd, 2020. Got a little bit of a bounce in the market yesterday, a little bit of a scare overnight from some comments. The futures plummeted and came right back up. White House walked back the comment about relationships with China. Market's still a little bit in this big, wide trading range. We kind of hit this hangover from prior to the Fed announcement, pulling back dramatically. And each day now has been either really bearish, or really bullish, really bearish, or nothing, where we're getting these tiny melted candlesticks. Yesterday provided a glimmer of hope for the bulls, even though we're still inside of this window, which I'm going to show you in a second. We actually did open up near Friday's low, hold those lows as support, and close near the highs yesterday. Once we got back above that open price after dancing around a little bit in the morning, the buyers came back in and they held it for the rest of the day, which was interesting. The only downside of it, I'm going to put a little bit of a negative on it just to be aware. Again, you want to make the difference between chart reading and tape reading. Volume wasn't really awesome. And you can tell why it's not awesome, because we're still stuck in this window where the bigger picture, the smart money, is not really allocating a lot in a big way right now. We do have some individual stocks that we're going to take a look at, stocks like DocuSign, but the big one that we're going to take a look at is FSLY today. Very interesting. It exploded yesterday. I think today is really more in profit management mode. Certainly, absolutely a day trading stock if we have the conditions intraday like we actually unfolded yesterday in the SPY. But what we want to see is that FSLY is more of a profit-taking, look for the next trade if you're not long already, because buying into this massive spike doesn't have a high trade expectation for follow through at this moment, which is a big deal, because we talked about that last night. A lot of people a lot of new subscribers into the boot camp were looking to buy stocks after they've already rallied for 7 days in a row, and some of them rallying double what they normally do. And yeah, the stock's absolutely a buy, but not necessarily right now. You have to be asking yourself, if I get involved now, what are the odds of me hitting my profit target versus me getting stopped out? What are the odds of it following through? Absolutely, once in a while you can find an outlier, but we're not trading for outliers. We're trading for what happens most of the time, but knowing what we're definitely going to do. And that's kind of the secret to trading. Nobody can really predict what's going to happen next. It's our job to really build that argument, to have that probability on our side, to stack the odds in our favor more often than not, and then we manage our positions. But really, it comes down to, it's our job to manage our positions based on our best argument, and then manage risk and leverage within that context. So if a stock has already traveled over the last week double what it normally does, the odds of following through there for a new profitable trade, they kind of diminish a little bit. So at the very least, you need to find a spot where it pauses and then look for the next move. So we're going to get into the market right now, and then take a look at it. We have a pretty good list of stocks that are breaking out again, which is a good sign, because they're breaking out without the market necessarily breaking out to new highs. If you find these videos helpful, and certainly if you find them profitable, please click down and subscribe to the channel to get updates. That would be awesome. And if you have any feedback, leave a comment too. I'd really appreciate that. I like to always see what I can do to keep improving what we're doing. So let's get into the ideas for the day. So what we're basically looking at in the market here is we're kind of stuck in this range. So we had a long-term trend from March. We kind of had a little bit of a celebration party here right into the resistance from the first when we gapped down. But now we're kind of stuck in this window. And you can see here a little bit more clearly, this was the Fed announcement. Since the Fed announcement, the market's really still trying to get a hold of itself. So we really haven't had the market strength behind our short-term trades like we did in this period of here from mid-May through probably the first week of June. We're looking for that to reestablish itself, and specifically even from 1 week to the next. So if we move out to the weekly charts, we're still an inside week here. So we technically went well off into inside. It's positive that yesterday we closed it and we opened at the same place as we closed last week and held that. But now we need to stay there now. So that's really part of reading the tape for this week. You need to know the conditions that mean everything's still good versus what changed. And you need to know what changed so that you could change your management. You may scale out, you might get out, but it's imperative that you know if the conditions are still valid or if they changed. Go back to yesterday's Stocks Breakfast video about how to manage your trades, and you will save yourself a fortune. Trust me. So FSLY is one of the stocks we're looking at today. Clearly a beautiful, beautiful chart over the last week and a half. Such a clean breakout. We had the $48 buy stop triggered and set for that. We wanted it to get above this level. We didn't trade it in this window, but the 48 level is what triggered it. And now we are well bid one. We actually had an inside candlestick breakout here as well. We're now built 1, 2, 3, 4, 5, 6 well bid days in a row. Big spike yesterday, the last 2 days in volume, which also highlights the fact that today's not the day to be getting long. Today is the day on a higher opening to consider trailing and moving up your stop loss, but absolutely in the list today, because what I just said, if we open higher, you can still trade it. We're talking the difference between making money in it today versus hanging on to this thing for another week. The odds of it following through immediately are diminished when it keeps spiking higher like that, but absolutely looking for it maybe today. Spotify is another one that really is setting up well. Really clean breakout, nice 2-day pause now. The gap, the reversal did not lead to the stock trading lower. Again, a really good example where we tested the previous day's low, held, and had a rally. So we're looking for some follow through and spot as well today. A stock that I stopped calling out because of the volatility, and most traders just, quite frankly, were getting steamrolled by it, which is why I wasn't calling it out. I'm trying to be responsible for everybody in a way that I want to call out stuff that makes sense. This stock now is consolidated for the better part of a week and a half, and now we're in consolidation mode looking for a breakout. So we're looking for a buy stop here in the 71.50 area. But again, I can't stress this enough, if you're not good at making decisions, if you don't have discipline, these kind of stocks can really separate you from your money. So if you're going to trade these kind of things, full disclosure, you need to be able to be disciplined and know when it changes, right? OSTK has been one that has been very, very profitable for people in the community. Chris really owns this stock right now. I'm very happy that he has a stock in his group of stocks, but this stock actually is 2 really good well bid days in a row. So you start to ask yourself, what does a good stock look like? How do you know when to manage your trades differently? The last 2 days there, absolutely. So we're looking for some follow through there. Square is the stock that we were talking about that normally does a $10 move, but today, heading into yesterday, now has moved $25 in the last week and a half, 25 or so, maybe 20. It's basically doubled what it normally does. So we still like follow through. We still like the stock long, 100%. It's just initiating a new swing trade up here becomes a little more challenging to expect follow through. So we're still trading it, but we got to pay attention to where the signs are that it might be turning around. Same thing with SE, almost an inside candlestick breakout yesterday. Not quite a perfect inside, maybe it was pretty close to being an inside candlestick. So we're looking for follow through again in SE. But again, remember these stocks that have traveled quite a bit over, and again, quite a bit for a trader, if we're talking about a week and a half, you can still trade them long, but initiating a new swing trade up at these levels is going to be challenged. Now, this is a little bit different because it paused for 2 days. So that's different. When the stock pushes and pauses, and now for 2 days, you can expect a little bit more. So we'll be looking for a little bit more of a move in SE. DocuSign also hitting all-time highs, still looks good. The only downside to DocuSign, which we spotted yesterday, was this massive spike in volume on this consolidation day, which actually brings me to another trade that I want to point out yesterday, and hopefully you took advantage of it. At the very least, scale back on your longs. If you're super aggressive, you can actually put out a short sale. Not a perfect trade, but a trade that actually was a classic tape reading analysis. How's that for a setup? But anyway, DocuSign, as long as we stay above the 162 level, the 160 level, if it's a longer term position that you want to hang on to the thing for a longer term position trade, 160 would be the line in the sand for me. But again, keep an eye on this. You don't want to see that as the stock is moving higher. That's usually signs of exiting by the smart money after a big move. The stock that I want to talk about, which we've called the last few days, where we said there was a spike in volume, churning of the stock, not moving higher with that churning. That usually is distribution. And look at the day we got yesterday in DraftKings, looking for a little bit more move to the downside. But the important point here is we spotted it. We explained to you how to spot it. And if you were looking at the stock yesterday, hopefully you did not buy the breakout, because the breakout had a lot of false expectations for following through. So again, these are the valuable things that we go over every single day in the boot camp. If you're struggling to understand and read these kind of things and even capitalize on it, at the very least, you're learning how to not lose money. And then you get to the other side, we actually learn how to handle what happens between entry and exit, right? So I'm very happy that we picked that out. We were able to share that with everybody yesterday. Peloton, again, new all-time highs. The thing I don't like about Peloton is we've talked about this in the past, noticing the difference between which stocks are good to day trade versus which stocks are good for a little bit longer term trade, swing trade, position trade. This stock to me has too many melted candles. Melted candles are small body candles where the institutional money, the smart money, is not involved in the stock from bell to bell, and you don't see a lot of red or green candles over time. So this is really more of a position trade stock that you'd hold a little bit longer, maybe use moving averages. But again, you have to keep an eye on a stock at or near all-time highs. PayPal as well, trading up at all-time highs. We actually had an inside candlestick yesterday closing on the highs. So I'm looking for a new breakout above the 171 level today, excuse me. CRW, I don't know why I keep saying tomorrow. CRWD as well. Work is one that keeps popping up in the community. The fact that it has gapped down after earnings, continues to close above the highs, two separate arguments there, right? Gap down has not filled the gap, but now recently we have now 1, 2, 3, 4, 5, 6, 5 out of the last 6 days closed above the open. So there is some buying going on in that stock. I have it now as a $35 buy stop. Not a lot of upside to the trade. I really don't believe it's going to head back up to that 40 level and beyond. So this to me would really be a trade where it would be more of a stock where I'd be just looking for that quick blip. If I was going to hold the stock a little bit longer, I would need to see it get through 40. And I'll tell you why. Look at this. This is what it had to get through months, probably 4 or 5 months before it finally did this, but then earnings dropped it all the way back down here. So not a stock that tends to follow through, which work obviously is is Slack, and Zoom is the other one where we broke out. Nice consolidation here on lighter volume. So we had a nice push up to new highs. Then we had 4-day consolidation and a breakout yesterday. I'm still looking to trade Zoom long. But again, are you seeing the kind of consistency where it becomes an active stock that you should trade every day? Probably more of a swing trading stock. We're not seeing the large green candles. Clearly the stock is in play. Clearly the stock is going up. A little more challenging to trade this stock as a day trading stock. One that we did call out yesterday that we had a buy stop in. We had a buy stop in 455 in Netflix, and you can see obviously it had a really nice breakthrough. So we're looking for Netflix to be well bid and follow through there as well. So plenty of stuff to do today. The futures tank came right back after that comment. They recalibrated what they said. We're looking for follow through. It's actually encouraging, despite the fact that it was still a relatively smaller trading range in the SPY, but encouraging that we found support at Friday's lows and had a good solid trend day and closed on the high. So we're looking for some follow through today. Take a look at some of these stocks and really dig in and think about what I just said about day trading versus swing trading stocks. Super easy to spot on the daily chart. You have good energy candlesticks with consistency versus those melted candlesticks with a lot of indecision. Those are tough to day trade. You want to be day trading the stocks that really have consistency with large green or large red candlesticks if you understand short selling, and make sure you're in the right stocks. So that's what we got for today. Just click down, subscribe, and if you have any comments or stocks you'd like to just have questions about, definitely leave that below too. So have a great day, everybody. I'll speak to you soon.